buyers obtained a $42,500 mortgage at 9.75% interest rate for 25 years. The closing date is June 15th with the first payment in arrears due on August 1st. What should the entry be on the closing statement? Well, we're talking about the buyer's loan, and we know that the buyer typically skips part of the payment. In other words, they pay interest in arrears and they pay after the full first 30-day period. This is telling me that closing is on June 15th with the first payment due in arrears on August 1st. On August 1st, the buyer would pay for the interest for the month of July. There is no way to get the 15 days of payment to the bank except to take it at closing. We need to remember that we're strictly talking about the buyer, and this is going to be a debit to the buyer. If the total loan amount is $42,500 and my interest rate is 0.0975, or my annual interest is calculated off of a 9 3/4% interest rate, I take 0.0975, multiply it times the $42,500, and I get an annual interest of $4,143.75. Since we pay our interest each period or each month, we're going to take that $4,143.75 and divide it by 12 months in a year to get a monthly interest of $345.31. Now we need to account for which part of the month that the buyer used. And the buyer used approximately half the month. So if we just divide it by 2, we come up with $172.65. So I need an answer that says $172.65 debit to the buyer. The buyer acquired a 90% loan on an $85,000 property. In addition, he paid 1 point as a loan origination fee. His other expenses were $4,250, and he had a $5,000 earnest money deposit. How much did the buyer bring to closing? This is an example of where you need to draw out a closing statement. Always label which party you're working with, because often the test will give you information on both sides, and you only need to work with one side at a time. So I label buyer, I have my debits column and my credits column. The first thing I know about this buyer is that the property they're buying is $85,000. So the sales price to the buyer is a debit. It's money that the buyer owes to purchase the property. Also, we know that this buyer got a 90% loan. At the day of closing, the principal amount of the new loan is a credit to the buyer. It's money that he's receiving from the bank to purchase the property. So 90% of $85,000 is $76,500. We also know that this buyer spent 1 point on a loan origination fee. Anytime you see the word fee or expense, automatically assume that it's a debit. The loan origination fee was 1%, or 1 point, which is 1% of the loan amount. So that is $765. Also, he had other expenses of $4,250. And he had a $5,000 earnest money check. Earnest money sits in escrow until closing and then is pulled out and applied to whatever the buyer owes. So this is a credit for our buyer. I total my 2 columns. I come up with a total of $90,015 in debits and $81,500 in credits. If I subtract my credits from my debits, that means that this buyer needs to bring $8,515 to closing in order to complete the sale of the home. A seller's house sold for $112,000 and he paid 7% commission. Loan balance was $63,700 and he had other expenses of $3,400. How much did the seller receive at closing? So we need to draw out a closing statement and identify the debits and the credits for our seller. The first thing we know about the seller is the sales price. And the sales price is going to be a credit to the seller. It's money that the seller receives in exchange for selling his house. So that is $112,000. Also, the seller had to pay a commission. The commission is a debit for the seller, and 7% of $112,000 is $7,840. Also, this seller had a loan balance. The loan balance is the amount of the loan that the seller still had to pay off. That is $63,700, and that is a debit that the seller will have to pay off. Also, the seller had other expenses of $3,400. Anytime we see the word expense, that would be a debit. Now it's time to total my columns. If I add my debits, the total debits are $74,940. The total credits are $112,000. When the seller subtracts their debits of $74,940 from their credits, they should receive $37,060 at closing after paying off all of their expenses.